Hi, everyone. Eric Mashinsky, Gold Investment Letter, 7:30 Eastern, August 28th, Monday night. I wanted to make a really brief video. Really, this is a huge day for us, and it's actually been a few weeks of subtle bullishness and benchmarks that have been hit in the gold market that I think today became very clear to more people that gold is going a lot higher, and that also means that silver is going a lot higher. Here's the bottom line. There are certain times, technically, even if you don't believe or know much about technical analysis, this is very basic stuff, where if you see a breakout in a very, very important and long triangle pattern, which I've pointed out a number of times in the gold market over literally the last decade, it's been tightening. It gets a lot of people's attention, and that's what's going to end up happening, and it's already happening with traders, fund managers, and investors around the world that are seeing this breakout just like we're seeing it, and are either rushing to cover their short positions and or just going long because of the technical breakout. And this is just going to accelerate. The fact is that because this consolidation has been tightening for such a long time, it tends to be very much more explosive once the move finally kicks in. If it's a short consolidation, the moves aren't as big. But this is a big deal. And so what I wanted to do was just verbalize the fact that I am extremely confident that we are going a lot higher in gold and silver. I've been talking about at least 1,400 for gold in 2017. I think we can see that as early as September. Certainly the high 1300s and retesting what we saw last July around 1375 is likely. And I don't know if we'll get right to 1400. Probably my guess would be that we'll need another attempt. So maybe we see 1375 and then a pullback all the way to 1300 again to shake people out before it really starts to rocket to new highs. But the number that I want to focus on is the 2011 high, which is $1,908 an ounce, and that's where gold is going over the course of, call it, the next 24 months. Maybe it takes into 2019, but I think it could happen as early as 2018. Just imagine where some of these gold stocks are going to be trading at that time when that happens. Tonight, gold was up to 13. You can see it, 1324.80 as a high. There was a spike because North Korea just launched a missile over Japan. You can see the titles right here. And, I don't think that situation is going away. My prediction was that we will attack North Korea in September. I still think that's a very, very good possibility. So there's a lot of drivers that are going to be here with many, many things that could be the reason, quote unquote, that gold goes higher. But the real reason is that it's in a bull market. And now we're in a massive bull market that has just been confirmed. And I'm going to essentially show you what I'm talking about by pointing out these charts that I sent out a little while ago. This is the least important of the three, which was the daily breakout. So, these trend lines are important. We saw it here. This is where gold turned over, and that's why here it had a little bit of a tough time in consolidation, but it just felt right. And then that shakeout we saw on Friday, that's what big money does to scare people before they're going to load the boat. Let's go to the weekly. This is the biggest situation. Let me make sure you're seeing this. I don't think you are. Sorry. I'm pulling up the weekly chart, but and you can only see, you can pull it up as I go. I'm looking at this right here. This is the weekly chart. You can see this in your email and pull it up. I pulled the picture up, but it's not showing it. Essentially, this is huge. This is a 2-year wedge pattern, triangle pattern that has been created since middle of 2015, really late 15 is where it's most important. So, 18 months minimum in terms of what has been going on here, which is a very long time. We saw Now it's almost 4 weeks ago, so 3 weeks ago as of Friday, gold traded and closed above that downtrend line. Then the next week it did as well, and last week it was the third week, which you'll hear me talk about liking to see breakouts confirmed with 2 or 3 days, 3 ideally, or in the weekly charts, weeks, and monthly charts, months. Months you can actually give a little bit less. I'd like to see 2, but we're already seeing 1 here very quickly in the monthly. I'm going to pull that up as well, and you should also from your email. This is big time stuff. You know, we're breaking out of it. We have broken out of it right now. It's circled. I showed you where that is. That was as of today's daytime close of 13.15 on gold. You know, this triangle pattern, this wedge has been building since 2007. 10 years. That's amazing to me. And that means that we could see gold. In fact, this is what I think is going to happen. I think we're all going to be shocked by how fast, furious, and quickly gold starts to run up this fall and winter. We could see $1,700 gold in November. I mean, that wouldn't surprise me. And in fact, you know, this is the setup that we've been waiting for. If you've been bullish on gold, you know, since the early 2000s, and there's been a lot of bumps and bruises, and there was a brutal bear market from 2011 to 2000 and early 16, and then we got very bullish early last year. The violence of that first 6 months that we saw into July of last year was really a precursor of what's going to happen again now. And you know, this consolidation and pullback, which has been very significant for a lot of the juniors, is a big deal. And it's been an opportunity for us to go ahead and buy more stock and get more position. So I wanted to put this out because I think it's just really super important that my subscribers, look, if you want to make money in the market, it really does come down to your ability to do things before everybody else is doing them. I'm ringing the bell tonight. You know, we think, you know, if somebody would just ring a bell and tell me when something has hit a bottom or a top, or this is a breakout bell ring. Gold is going higher, silver is going higher, and these junior mining stocks that we cover are going to be explosive. And I'm telling you this now while they're down and out, and you can buy them cheap. If you wait to see if what I'm saying and what the market is showing us is true, and you buy when you see with your eyes, and call it October, November, December, even next month when, you know, Bravada goes up 50, 100%, Southern Silver, Timberline, these are the small ones that I'm talking about. We're already seeing the moves in the McEwen Minings, the New Golds, some of the companies that we own that are already producers. That hits their bottom line right away, and those are going to move first. So you really want to at least put some of those on the books right away this week while people are still out in the Hamptons in the south of France, and the big money doesn't come back until next week, which I think is when we will see things kick into gear a lot more for gold and silver and the miners. But I'm just trying to relay my conviction and confidence now that the market has proved my speculation right. It's going to be, look, if gold rolls over, which is, there is some possibility of it, but I think it's minute based on what I'm seeing, that gold rolls back over, and this was a bear, what they call a bull trap, and goes, you know, above that triangle and then falls back over. But I just don't see it happening right now. I mean, we've had the confirmation on the weekly chart clearly, and the monthly is coming next. So get some money into the market, get some money deployed, put some money to work right now is what I'm saying. And you can do it with the most conservative vehicles possible. You can buy GLD if you want, buy physical gold, physical silver, buy GDX, buy SIL, which are the producing large cap gold and silver miners. If you're a wealthy person and you don't want to mess around with the tiny little juniors, just put some money to work in the bigger stuff. I think you will be happy that you did so at this time. These are the type of signals that tell us that it's time to take action. And for those of you that can afford to take more risk, now is the time to be buying up some of the smaller names. And you know what most of those are. I'll be talking about more of them in the short term. My favorite and largest position in the gold junior space is Timberline Resources, TLRS in the US, 35 cents. TBR in Canada, about 45 cents. 2 million ounces of gold resource in Nevada, and trading at a $10 million market cap. So $5 an ounce in the ground. This is the type of company that I think is going to have massive leverage to a gold bull market where, it could go to $10. And, you think I'm crazy or promoting, but that's what I think is going to happen. And I mean, I filed a 13G last week, my first ever on Timberline. I represent almost 8% of the outstanding shares and warrants in the company. It's a big bet for me personally. It's it's a big six-figure bet. And look, at the end of the day, this is the first time in my career and in my life where I have capital and I have a crystal ball, so to speak. I know what's coming. I know that this is a bull market, and I know that it's going higher, and I know that it's got a lot higher to go. And I know that I've been taking the right actions over the past couple of years, building positions, and I've got a lot of equity in these plays, more than probably most rational people, I would say. I've got 65% plus. It's probably closer to 70 of my investable assets exposed to gold and silver related companies. It might be 65 still, but it's big. Most people would put about 10% of their investable assets in gold. I think that's a good start. But at some point, because of my conviction and where I'm at in life, I'm still relatively young, early 40s, and I'm a bachelor. I don't have any children, so I'm looking to get extremely wealthy from this bull market. And to do that, you've got to take risks. You've got to lay your money on the line, and you got to do it when it's not so evident. There was I had a little email back and forth today about uranium, and I sent this out on Anfield, which I'm just going to show you something to segue in here to uranium, because this is the next market that I think is a no-brainer. It's had a devastating bear market. We saw a blip earlier this year, got us excited. Now it's fallen off. Everybody's demoralized or selling or just not paying attention. Now is when you load up on this stuff, people. This is when you do it. If you don't have the discipline to do that, don't blame newsletter writers or TV personalities or your broker if they're encouraging you to do something and you don't want to and you don't do it, and then they're right, and then you do it too late, and then the pullback comes and you're back to demoralized and you're completely on the wrong side of the emotional curve. So in any event, I had one of the subscribers who said, I bought Encore at basically at the top, 10.5 cents US, and wasn't interested in uranium because of that. But that doesn't make any sense. That's the opposite of how you should be thinking. You should think, if you think that the bull market in uranium is still ahead of us, I mean, nothing has changed in the sense that it's gone through 7 years of hell. It had one blip, and now it's making higher lows, which I sent out in the video on Anfield, and it's giving us evidence that things are about to turn around. These bottoms need some time to build. We've seen it in gold. Look at what happened. It took off early last year. It flew until July, and now it's been a year of frustrating for some pullbacks and just false starts and everything else. But that's the time on those dips where you get the second chance, if you will, to get positioned before a multi-year bull move. And that's where we are today with gold, silver, and the mining stocks. And then also right around the corner, I think, is uranium. And for those of you that want to jump on that private placement, there was one chart here out of their presentation I thought was something I could bring up for not only Anfield, but also for our Encore energy investors. You look at the caps of even the big guys from Chemical, Next Gen Fission, UEC, These are the bigger, bigger players, and their market cap per measured and indicated pound of uranium. You see 557, 566, 934. The average of these players is 487 per pound. Anfield is at $1.19. So you're talking about a quadruple in valuation that could be done today just to catch up with the rest of the peers. And I did the math on Encore. Here's how cheap Encore is. 12 cents. This number here, 12 cents of indicated per market cap pound of uranium, because they're like, right here, you look at Encore, you've got 111 million shares outstanding. The market cap's 4.46 million. They have $1.5 million in cash, at least, if not more. $3 million market cap and 30 million pounds. I think it's 26. We'll look right here. This is where I did the math. 26.6 million pounds at Crown Point and Host of Butte, which is the largest producing. There's more mineralized material and higher grades than the largest producing U.S. ISR mine. So these are the types of opportunities that just don't last, folks. This is the no-brainer stuff. This is the time when you don't say I bought it at 10 or 12 cents when it was running up and I was excited, and now I'm going to shy away from it and hope to get back to break even. That's a loser's mentality. If you don't believe in it now anymore, that's fair enough, but sell it, move on, move away from uranium. But if the thesis is still in place from last year, you should be buying more. I've bought another 1 million shares of Encore slowly over the summer, just chipping away, 100, 200,000 shares here or there, sitting on the bid. I just bought more. I think it was, I don't know if it was today or Friday, just got a little bit more at 4 cents and then 4.5 cents. There's nobody buying it. I'm not, there's some of these, it's like you're the only guy in there buying the stock. I love doing that. That's when I get my best bargains. But for some reason with investing, we like to wait until there's all this crowd verification instead of having some cojones and stepping up and being the one who's going to end up going in there early. Maybe not the only one. You're not the only one, but get in there early. Get in there when things are not necessarily looking good. Be, a contrarian investor. If you like to identify yourself as that, and you have to take advantage and take action when most people are doing the opposite action or doing no action. Otherwise, you're just going to get what everybody else gets. And trust me, there's going to be a lot of money to be made in the miners and in gold and silver, and there's time to buy it. There is time. You can continue to buy gold up to $1,400 an ounce. If it's even going back to the old highs at $1,900, that's a great return. And even if it takes 5 years, and the miners, could have so much further to go. It's not like this is the last call, but it is a time where there is a clear sign where we have seen some serious evidence that gold has broken out of a very long 10-year consolidation. This is big stuff, guys. So I just wanted to verbalize that a bit. It probably went a little longer than I was hoping here, but hopefully that helped somebody and gave you some ideas. Thanks.